Should you trade Chinese tech stocks? By www.profitabletradingtips.com. The Chinese stock market has been on a roller coaster ride. It rose 150% in a year, fell 30% in a month, and rose 13% in 3 days before correcting down a percent or so. The rapid rise in Chinese stocks was largely driven by mom-and-pop investors who were getting out of real estate and trading stocks on margin to multiply their profits. The problem that rose is that there are Chinese tech stocks with PE ratios of 220. Market Realist talks about the Chinese tech stock bubble. In April 2015, it was observed that the valuations of technology stocks in the Chinese stock markets were on average 220 times their reported profits. This made them the most expensive shares compared to similar companies globally. It should be noted that the average PE, price to earnings ratio, was 156 when the NASDAQ Composite Index peaked in March 2000. Earlier this year, on April 2, 2015, Credit Suisse analyst Vincent Chan stated that Chinese technology stocks do resemble the dot-com bubble. Given stocks fell 50 to 70% when that bubble burst in 2000, these small-cap Chinese shares may face big corrections when this one deflates. So, should you trade Chinese tech stocks? If you do, you should probably consider shorting them, and also consider trading the ADR versions available on U.S. exchanges. Chinese tech stock ADRs. An American depository receipt is defined by Investopedia. A negotiable certificate issued by a U.S. bank representing a specified number of shares, or one share, in a foreign stock that is traded on a U.S. exchange. ADRs are denominated in U.S. dollars with the underlying security held by a U.S. financial institution overseas. ADRs help to reduce administration and duty costs that would otherwise be levied on each transaction. Buying American depository receipts is a common way to trade foreign stocks on U.S. stock exchanges instead of on foreign exchanges. The website topforeignstocks.com lists 110 Chinese stocks that trade as ADRs. The point is that the Chinese stock market is a casino that is not linked to the slowing economy. The government has entered the picture to bail out the market instead of letting the market take care of itself. How you should trade the majority of Chinese tech stocks is with caution. Are there good deals? Are there undervalued Chinese tech stocks? If an overpriced stock goes up in price, was it a good deal to buy at the high price? The question for trading Chinese tech stocks is if the market will be allowed to correct itself, or if the Chinese government will continue to pump money into the system to support high prices. The best way to trade Chinese stocks is probably with caution, ADRs, and for brief spans of time. And always remember the comparison of the current Chinese stock market with the US dot-com bubble. It is or not that the vast majority of big foreign investors are reducing their exposure to the Chinese market. For more insights and useful information about trading stocks, forex, or options, visit www.profitabletradingtips.com.